All right, let's get some more analysis, some opening calls for the Aussie share market. We're joined by Chris Weston, IG Chief Market Strategist in Melbourne. Chris, great to see you as always. Yeah, first rally of 2014 there for Wall Street. What did you take out of the session just finished?
No, was what happened in the Eurozone. I think that's probably the most important thing for me. And we can talk about that later on, but what we saw in the Spanish market, what we saw in the Italian market, what we saw in the Greek market and in the Irish market was down to the big moves that we saw in the bond market there. Otherwise, you've got to look at what happened in terms of the data side of things. The trade balance numbers out of the US were really strong, and it was part of the reason why, part of the forecast for a higher US dollar this year is premised on this shale gas revolution, the energy revolution that's taking place in the US. The US over the next 5 years will be the biggest net exporters of energy in the world, and that's what we're starting to see now. They're importing much less petroleum products. They're exporting. Their exports were at record levels as well, up just less than 1%. And that trade balance and ultimately their twin deficit is coming down. And that's going to be a very big positive for the US dollar longer term. It's going to give upside growth to the revisions that we're going to get to Q4 GDP numbers here. So the US dollar, especially against the Canadian dollar, it had its biggest one-day gain since June last year. We saw some weak PMI numbers, IV PMI numbers out of Canada. We saw some weakness in their trade balance numbers in Canada as well. So you've got that double sword where a strong US trade deficit and against the weak Canadian numbers. So that was another thing I took out there. But after 3 days of losses, where I think the S&P pulled back 1.4%, we've got the Dow, we've got the S&P just about to break new all-time highs again. So, nothing's really changed from last year. I think the fact that we've had three down days at the beginning of the year had a lot of naysayers saying, this is a really bad situation for the start of the year, as goes the first 5 days, as goes the rest of the year. We get follow-through buying tonight in the US, and we get new all-time highs coming through in the S&P and Dow and NASDAQ. And, a lot of what we've just seen in the first 3 days means absolutely nothing. So, yeah, positive session all round. And, it's not just in the US, but all across the world that we saw, positive flows there.
As you said, though, the big story for you was Europe. Ireland's coming back to the bond market, the German data, and also, of course, the carry through, too, as well, about the better prospects for Spain.
For sure. I think, the story here is exactly what's happened in the bond market and the psychological significance this has on the rest of the European debt markets here. The fact is the Spanish market was up nearly 3%. Why was that? It's because Spanish yields were down, significantly last night, down about 10 basis points. They were only at 3.8% on the 10-year, which is obviously the benchmark that everyone talks about. It's actually the lowest levels in 4 years. Why were they down so much? Well, it's because of Ireland, as you say there. I mean, these guys came out for the bond market for the first time in a long, long time since the European debt crisis started. They've had bailouts. They refused bailout in the previous last year, and they said that we want to actually go into the primary debt markets and actually raise capital for our funding needs. Now, if you look at Spanish debt, Irish debt, that's gone from about 4.2% last August, right down to where it is at the moment. We're trading significantly lower than that at the moment. In fact, the 10-year in Ireland is only about 30 basis points higher than what it is in the UK at the moment. So the market's just taken out a huge risk premium out there. So this is really psychologically important that Ireland, who had all these problems, have reinvigorated their economy. Okay, we've seen a lot of skilled labourers move offshore. But, it's given the likes of Portugal, it's given the likes of Greece a lot of hope that perhaps this year, if not next year, these guys can come out into the debt markets and actually raise money rather than rely on European debt lifelines. And, Portuguese yields at 5.4%, they've come off sharply. Greek debt now at 7.8%. The heights of the GFC back in 2012, they had 44%. So that's been a hedge fund's absolutely favourite playing ground. That's been one of the trades over the last 3 years or so. And I think the fact that Ireland now raised 4 billion, which is just under 4 billion, which is about half of their funding needs for this full year, they could have sold 14 billion if they wanted to. Very, very important for the European debt situation. And Spanish and Italian yields came down as well, and that's why the equity markets there had such a good day.
So what does all of that mean then for us at the Open?
Good day. Look, we're calling the market up 0.6%. I think there was some interesting moves yesterday. I mean, it was a bit of a bloodbath going on in the materials sector. I mean, stocks like AGO, big volumes coming through, the highest volumes in Atlas Iron since around November time. We've seen stock companies like Credit Suisse coming out and actually upgrading that stock overnight to an outperform based on the share price weakness. I think $1 is a really important level. The stock closed at 106, so if we get down to those kind of levels, big pivot support there. Will we see the stock stabilise? Mount Gibson as well, down heavily, Fortescue down over or nearly 5% on big volume as well. The iron ore price was down about $1 yesterday, about 0.7%. So that's a sector that I'm going to be looking at. The whole materials complex, whether you're in gold stocks, whether you're in iron ore or other things, did get hit pretty hard. So it'd be interesting to see if we see better days in that space today. I think otherwise, it's a positive open. Banks should do okay. And I'm looking at stocks like 10 Network. 10 Network now is trading at a 30-day high. It's got the most momentum out of any stock I'm seeing in the market at the moment. And, it's about 30% above consensus of the year-end price target. So either, the stocks are very expensive at the moment, or we're going to see the analysts have to change their call as well and try and catch up with the market, which, we've seen many, many times before. So interesting day. Of course, we're going to keep an eye on China later on. I'm going to keep my eye firmly on the renminbi as well. I think that's an interesting concept, what's going on there. But yeah, good positive day, and hopefully sentiment's going to pick back up in the material space.
Yeah, all right. Lots to watch then. Chris, thank you so much for that.
Great. Thanks.
Chris Weston there from IG. Yeah, so the opening call for the Aussie market up